The Bank of England cut by 25 basis points this morning, as expected. What wasn't expected was the 9-0 vote. They were expecting 8-1, and also the two governors who wanted to cut rates by 50 basis points, as opposed to 25 basis points more. So more dovish. We're seeing the pound versus U.S. dollar down over 1%. The U.S. dollar is higher. In the euro versus U.S. dollar is also lower with the dollar moving higher. The dollar versus yen is seeing more up and down trading here today, with the dollar actually a little bit lower versus the yen bucking the dollar higher trend for in that currency pair. So with that said, let's take a look at those three currency pairs from a technical perspective to kickstart your trading for February 6, 2025. Let's get going. Start by looking at the euro versus U.S. dollar, and we stretched higher since the low on Monday, the gap low on Monday, and the price moved above this swing area, but fell short of this other swing area up here and started to rotate back to the downside. We closed back below the 104.05 level, just barely in trading yesterday, and right near the 200-hour moving average. What's the significance of 1.0405 class? Well, if you go to the daily chart and take a look at the range since 2022, the 2022 low to the 2023 high, the 50% midpoint of that range. So 3-year trading range is 1.0405. So that's the significance of it. Remember that class. We in the new trading here today, we tried to stay below the 1.0405 level and tried to stay above the 200-hour moving average. That was impossible because it's so close. Eventually, the sellers won with the price moving below the 200-hour moving average and retested it right here, giving the sellers the go-ahead to push to the downside, and they did. Now we're looking down toward the 100-hour moving average as the next key target at 1.03457. We also fell back below its 50% retracement of the move down from the January high to the January low. Maybe it's not the January low, but the most recent low, and that 50% retracement comes in at 1.03771. So this is a close resistance level, but basically, I would say ping pong, or the potential is the resistance up here at the 200-hour moving average, support down at the 100-hour moving average. We'll see what happens after the failed break above all these moving averages earlier this week into yesterday's trade, and the inability to stay above the 200-hour moving average. So that's how I see the euro versus U.S. dollar today. Taking a look at the dollar versus yen next, I mentioned that this currency pair has seen down and up trading. The down came earlier in the session with the price holding below the key 200-day moving average. The 100-day moving average is just below that 200-day moving average right here. So these two longer-term moving averages have converged, and this is the converge point. This is really a longer-term neutral level for the dollar versus yen. So it's somewhat not surprising that we're seeing some consolidation around those two levels with up and down trading that we've seen. Admittedly, when we broke below the 100-day moving average today, we did see some movement to the downside, which was somewhat significant, at least in the short term. But then we saw the bounce back to the upside as traders said, "Wait a minute, we've gone a little bit too far, too fast," and we actually ended up moving back above the 200-day moving average in the process. But that was short-lived, and we started to rotate back to the downside. So this volatile action around the two longer-term daily moving averages does say that the market is a little bit hesitant. But remember, we tried to stay below the 200-day moving average here. We failed pretty quickly on the break above the 200-day moving average. So the tilt is still to the downside, and the burden of proof is for the buyers to get above these moving averages and stay above them. So I would give the tilt to the downside here for the dollar versus yen, as long as the price can remain below the 100 and 200-day moving averages. If we start to move back above that level, then we could see a rotation back toward this swing area up through here. This swing area goes back in time, so all through here. So pay attention to that. Also the 50% midpoint of, I'm going to just bring it in closer here, 50% midpoint of the move up from the December low to the January high. That was broken in trading, and it was also a floor level going back to a couple weeks, I guess, or maybe last week, where the price bottomed right near that 50% retracement level. So that still remains a key level on the top side for the dollar versus yen. As long as the price remains below it, it's more bearish. Okay, let's take a look at the sterling versus US dollar. I mentioned that this currency pair is the biggest mover in trading here today, and you can see the rotation down, down, down. It was going before the interest rate decision. The interest rate decision just gave it a kickstart away from these moving averages. We had moved below the 100 and 200 hour moving average already, and was trying to use those levels as resistance. And boom, down further goes the pound versus US dollar. And we've now headed into this swing area through here, where we had a number of different swing lows and swing highs going back in time to this period through here. We finally based and moved higher. Gap below that level on Monday's trade, and then tried to hold the resistance here, then moved above it and reused this level as a support before moving to the upside and to the high price for the week yesterday, before rotating to the downside and gathering momentum lower, lower, lower. So here we are back between 1.2351 and 1.23759. Break below that level opens the door for further selling. Do we retrace all the move from the week? It's a pretty big move to the downside. This may be a level where the market has a pause, and Bailey's got going on right now. So, anything can happen. But, what we do know is the sellers are more in control here below the 100 and 200 hour moving average. And maybe even this swing level right through here, which cuts across between at 1.2391. That's another level I had earmarked as a potential level of support or resistance. We broke through that without much problem. So pay attention to that. So there you have it. I'm kickstarting your day for February 6, 2025. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.